Talk to me about what's going on in the world right now.
Someone like myself that's covered tech my whole career. We are in an unprecedented build-out of essentially the next layer of the way humans are going to interact and enterprise is going to interact.
I think everybody would agree this is a revolutionary period, but in revolutions there are winners and there are losers. Let's talk about Apple.
Elephant in the room is AI. It all is waiting on when they finally double down on Gemini partnership and actually give us something that's going to be the catalyst for Apple going forward. When Trump does these meetings with big tech CEOs, you said, what's the biggest constraint? It's power.
You think tremendous number of data centers is going to be this little nuclear reactor powering the data center.
That's our thesis.
Let's talk about Palantir for a second. What does Palantir do?
Palantir's work with every three-letter agency in the U.S. They can mine their data in a way that basically no other company in the world can mine data. But where they're going on the commercial side, oh my God, because now they're taking that technology, that is going to be the magical solution in terms of AI.
Hi, it's Steve Eisman, and this is another episode of the Real Eisman Playbook. And today, I have Dan Ives of Wedbush Securities, the tech analyst. Welcome, Dan.
So excited to be here.
So I just want to point out one thing. We are both bullish on the market. You know, when I go on CNBC these days, they call me Happy Steve. But I think the difference between our backgrounds can be expressed in our fashion. So I come from the financial services background. I'm wearing a sport jacket, a little podcasty, but yet staid. And you're a tech analyst in the wild, wild west, hence the outfit that you're wearing.
But at least the sunglasses, I took them off.
Thank you for taking off the sunglasses. So let's start with what happened this week. So I'll tell people who don't know, there's a company called Eightco. Stock price was $1.45 on Friday at the close. And Monday morning, they announced that Dan Ives, my guest, is now the chairman of the company. The company raised $250 million in a private placement, I think, at $1.45. Yeah. And then Eightco was going to go out and buy a cryptocurrency called WorldCoin. Mm-hmm. So the stock proceeded to go straight to $80, then went to $40, and has corrected over the last couple of days, but it's still considerably higher than the $1.45. Yeah. By the way, congratulations.
Thank you. Thanks.
But explain to me, because one thing I read about is that OpenAI has created, Sam Altman has created this device that gets to authenticate you by looking at your eyeball. And then somehow a cryptocurrency shows up. Explain how that works.
Yeah, and look, and I take a step back. Like, I wouldn't have done this venture if it was just a token strategy, like a typical, you see many of those cookie cutters coming out. I mean, to me, I view like everything Sam's built with World, I view it as an AI infrastructure play, because in the future, especially in a robotic world, bots everywhere, you're basically going to have to identify as a human. And that's going to become more and more important, but you need true authentication. And I believe what they've built with World in terms of iris scanning technology, they're miles ahead of what anyone else has built. 15 million have already signed up for it, and it's going to about 100 million over next year. But in terms of to put it all together with the token, obviously Eightco buying World in terms of our treasury vehicle. Okay, so I bring the orb in, you sign up. Steve so all of a sudden
put my eyeball in there
so you
like
sign
that.
Up, you put your eyeball in, it basically scans it. That data is in the orb for basically a second, and then that data leaves the orb, goes to your World app. The data in there disappears forever. Now it's actually in your app. You get a token, a World token, as part of that.
Just for putting your eyeball in.
It's very similar as like the PayPal model in the early days, right? $20 to start a PayPal account.
I see.
So now all of a sudden you have a token. Now, if you look today, 15 million have gone down that route. That token strategy, the way that the token trades, World, it's all based on this. Now, in the future, look, the goal is that we talk about 100 million. I mean, we believe it's ultimately going to be billions because...
But how does the token have any value if you're getting it for free?
So at first it's free, but now the token is... if you look like in Japan, the second biggest advertiser in Japan uses World as a way to scan relative to, making sure that there are humans and not bots. You see it actually use cases on social media. I believe in the future, you're going to have social media that are ultimately going to pay a fee to actually have authentication from a world user. Our view as advertisers are going to pay for this. So it's a good example of you build the network, the use cases then form.
And then the token has value.
So I don't view it necessarily as quote unquote a store of value today. My view is it starts off, it's an AI tech authentication play.
Okay.
Then as now you're up to 15 million.
But Eightco is just going to own the
exactly.
The token.
That's
the authentication is done by his company.
That's by Tools for Humanity. So that's separate.
Got it.
But it's all based on the token strategy. And it's our view that this is something that's going to, as it expands and you start to see that network, it has value in terms of not just the token, but with the network effect and ultimately the monetization in the network. And that's what just like, Saylor's done on Bitcoin, Tom Lee's obviously done it on ETH, through Bitminer. Bitminer is an investor in our venture because of the relationship with Ethereum.
Okay, let's take a step back.
Sure.
We're at a cocktail party.
Yeah.
I've never met you. You tell me what you do. I know some of what's going on. I read the newspapers. I read some research reports, but I don't know anywhere near what you know. Talk to me about what's going on in the world right now in a couple of paragraphs. Like, give me your sort of gestalt.
I would tell you, as someone like myself that's covered tech my whole career, it is truly a real fourth industrial revolution that's happening. We're living in it. And it's my view that when it comes to the AI revolution, it's transforming enterprises today. That's where the spending is.
Right.
But in the future, it's consumers. So when you say what's happening today, I view it as like it's not just the tech bull market, because it's my view we're in a tech bull market for the next 2 or 3 years at least, but we are in an unprecedented CapEx build out of essentially the next layer of the way humans are going to interact and enterprise are going to interact. So I would equate it to like Vegas being built in the 50s. It's set, you're built. Dubai being built where there's no building. That's essentially what we're doing when it comes to AI infrastructure.
Okay. So let's say at a high level, I think everybody would agree this is a revolutionary period, but in revolutions, there are winners and there are losers. The winners right now are very, very obvious. There's the people who are building up the infrastructure. So obviously it's NVIDIA, it's CoreWeave, it's anybody involved in kind of the hardware-y space. But they're going to be losers.
Totally.
Who do you think, if you had to like draw up a list of, I'm not saying that say definitively that's a loser,
sure,
but who's potentially a loser?
I think the biggest potential losers are IT services companies.
You mean like a Gartner?
Just any IT or even consultant, because the reality is that when you think about AI, like if you think about like, the McKinseys and the Boozes and the, and obviously Accentures and others, that is definitely a headwind. Now, I think someone like Julie, what she's doing at Accenture, 20% of Accenture consultants are now AI. So like they're pivoting quick. So I think IT services, the Cognizants and others definitely have a lot of pressure. Look, I think the biggest one is like software right now is under attack. You see it with Adobe, you see it with Salesforce. You see on the other side, Oracle be like, hey, hold my beer. Don't throw us in that category. And they pivoted, really years ago with Safran.
Hard.
But if you go back, 2 years ago, everyone's like Oracle, they're a loser in AI. It was really how they built up the stack. They built actually the product technology around that and the monetization. Salesforce, and I do believe that they ultimately will be able to get out of this as a winner. They right now, they underestimated how quickly this was going to happen. So I think overall, when you think about winners and losers, and you go into different categories, I think you have tech, transformational tech or next-gen tech is going to be more of a winner. There's going to be private companies today with 10 employees and a bunch of engineers. I don't mean .com bubble moments where it's like, here's, because we have a spin up a PowerPoint, this is what we're doing. Because of the technology, if you build the use cases it's like that's the difference. Like you don't need Series Z capital. You can now, if you build up the right.
So let me press that for a second. So the argument that I heard from I think it was Ben Reitzes of Melius well over a year ago was this. He said that the cost of creating software is going to collapse here, and that you've got some of these iconic software companies like a Salesforce, Adobe, et cetera, that people have loved for a generation. They've got the SaaS model. They've got tremendous moats built around them. And these guys are going to be under attack because, they have a great product, but somebody's going to show up with a much cheaper product. And as I like to say, their moats are not so moaty. Do you accept that or don't accept that?
It's like, I think, and Ben's a good friend, and there's a great point. I think it's like yes and no, because the one thing that you have to factor in is like, these install bases are massive moats to begin with.
Yes.
You can't just be like, okay, I'm going away from Salesforce, Adobe, whatever it may be. So the moats are there. Now, do I believe the incremental sale is incrementally much more difficult? Yeah. Because the reality is that when I talk to CIOs around the world, it comes down to like, hey, if you got an AI solution, come in the office, let's talk. If it's non-AI, go to the back of the line. That's the biggest problem right now because it comes down to
So it's not that people are necessarily abandoning Salesforce and Adobe. They're not in a rush necessarily to buy new from them.
Because the edicts from the boards, from the investors, is like, I want to make sure that in this arms race, we're not on the outside looking in. Look, that's why is Apple underperformed? Because the reality is that one of the biggest pours out for the last 15 years that it's about Michael J. Fox Back to the Future moment, right? It's like they continue to be focused on like iPhone, this, we tweaked it. Everyone's focused on what's your AI strategy? Is it Gemini? Are you going to buy Perplexity? You can be on the outside looking into the biggest fourth industrial revolution that we've seen in the last 50 years. That's the issue. That's why it's like cool kids table. Then there's the table like back toward the kitchen and stuff. And that's the issue right now in terms of tech.
Let's talk about Apple. What are your thoughts here? I mean, the criticism is there's no AI strategy, but on the other hand, any AI product that comes out that the consumer is going to use, it seems to me has to work out some deal with Apple. So how do you use? It's pay to play with Apple.
They're paying. You got to pay a toll on the highway, and that's Apple, right? So the reality is like the reason we're bullish on it and continue to be is like the install base is unparalleled. You have 1.5 billion iPhones. The monetization opportunity at the end of the day, the consumer AI revolution, one way or another, goes through Cupertino. But it comes down to like Apple's stock. I believe we get to 270, 280 without AI.
Where is it now?
235. Okay. But the issue is that for this thing to actually outperform, because it's been a huge underperformer, you need them not just to collect the tolls on the highway in terms of the services or on the app store. You need them to have true models built into their phones that are proprietary to make sure Steve, Jane, Jim doesn't leave. And I think that's why they've significantly underestimated it. They've lost a lot of talent internally. There's a better chance of me playing Ryder Cup Bethpage September than anything happening internally at Apple. Has to be external. And look,
so either they have to buy something external.
They either have to buy a Perplexity and that's why Google, I think fundamentally, they were waiting to see what happened in the DOJ situation to see if that got cleared up. Clearly, that was a huge win for Google. And now Sundar and Cook could do another candlelight dinner to figure this out and actually get this deal done.
Interesting. Okay. What do you think the conversations are like internally at Apple now about what's going on?
Look, there's a part of Apple that's run like a motor vehicle in New Jersey.
Meaning
in a bad way, like the bureaucracy, the red tape, it's run like a municipality. And that's part of the problem, right?
Is it really? I had no idea.
That's been a huge part of the problem at Apple is that innovation has really lacked, right? Like in other words, like for a company where there was the car, where there was autonomous, different. The reality is that the product innovation has been lackluster. You have the biggest install base in the world, But every time you go to an actual Apple event the last few years, you're trying to drink a Red Bull not to fall asleep.
So how was the phone? They had the phone, new phone meeting. How was it?
Dude,
It was
I honestly needed 2 cappuccinos to watch it. Two.
Doubles each?
Doubles each. Just to actually watch it, right? From Joe and the Juice.
It was that boring.
It just because the reality is it's going to be on a scale of 1 to 10, the product cycle is probably an 8.5. Okay, is Street underestimating numbers? That's enough where I think just given the install base and what we're seeing in China to be a catalyst. But it's elephant in the room. Elephant in the room is AI. It's for someone like myself that goes to around the world with tech, you can't just say, okay, everyone else is playing this game, we're not playing that game. So now it all is waiting on when they finally double down on Gemini partnership and actually give us something that's going to be the catalyst for Apple going forward.
So let's go back to something that you said, that why is innovation, what happened to Apple that the innovation has lacked? Because we were talking before the show about Patrick McGee's book, Apple in China. And the way he describes how Apple moved all its manufacturing to China and incredible manufacturing
logistics genius.
Innovation, right? Logistical genius. One thing he said, which was interesting, he said that what Apple did in China is they're not making, let's say, 1 million Fords. They're making 1 million custom-made Ferraris in China. That's how incredibly innovative they've been. And yet that manufacturing innovation has lacked in product innovation.
Well, also
why?
Product, but also it's they're very focused on privacy. In other words, they're not a tech-centric company in terms of willing, if you look, it's Meta, willing to make big bets, lose on it. I'd say metaverse, but then obviously hit massive home runs like AI, what Meta's done. I think everything's slow there to come, even on content, the content strategy.
How long has this been like this, you think?
It's been like this, I'd say probably for the last 3 to 4 years, but the impact you haven't really seen just till the last 1-2 years. Because look, biggest strategic mistake they ever made was not acquiring Netflix. I'm saying just go back to the history. They underestimated content.
Right.
They underestimated the AI build out. They've never done acquisitions, right? It's we could do it better. But
they're anti-acquisition.
But the reality is, it's almost it's like a kid in high school or whatever, kid that plays baseball. You're a legend at 7U, 8U, 11 in your town, 12. Eventually, when you start playing club and you go to perfect game in Atlanta at 15U, that's where clock strikes midnight when you see the other kids from California and Hawaii. Whatever. The point is that's what happens to Apple. And it was they hit a point where it's innovate. They hit a ceiling. Others were so much better. And guess where developers went? They left Apple. If you're a 22-year-old coming out of engineering school in the United States, you're going to OpenAI. You're going to Palantir.
Right.
You're going to Perplexity. Apple, it's you don't want 12 meetings to decide what type of food you want.
So it's a
at 12 o'clock.
bureaucratic nightmare in a way.
And look, and I'd say to some extent, the reason in 22, the reason the most AI engineers in the world were at Google. When you look at DeepMinds and everything else, Deep Labs, you go back to OpenAI, Altman, it was Nadella was the only one willing to make the bet and understand the importance. And Microsoft, that was the bet of the century that they made in OpenAI. That could have easily been Google. But the problem there is that the bureaucracy was there, engineers were leaving, and that's where the whole thing, Google missed that first part of AI because it was really run, and I think they recognized it was run like a municipality, right? The red tape. Next thing you know, it's you feel there's gonna be a Kodak, sort of camera somewhere or some Xerox machine, and I think that was the fear. They quickly changed that philosophy, did layoffs, brought other people in, and now Google's winning again. But they went through that phase in 23, 24, where finally, and that's where Sundar and everyone came in. They're look, we got to rip the Band-Aid off and change this whole thing.
So let's talk about for a second. There are a lot of different OpenAI companies. There's ChatGPT, there's Perplexity, there's Gemini. Is there an obvious better one at this point?
I think ChatGPT is playing a different game just because OpenAI. I mean, first of all, they're years ahead. The scale is at a total different level. And then ultimately, it's like very similar to NVIDIA. Then eventually you start to build chips, you build out the ecosystem. Like they have massive capital. So it's a capital game too. When you look at Perplexity is an unbelievable model.
Which is Google's.
So when you look at Google's, and remember, Google basically, they have their own sort of proprietary model, but the main one is Perplexity, ChatGPT, I view as kind of the
top two.
Top two. When you look at Perplexity, the issue of Perplexity is like, you can't be a standalone just as the model, because the value fundamentally is really in the data. Like I'd argue like Palantir, it's data. They don't have a model. It's all data driven. That's why Perplexity's issue is going to be eventually they're going to have to find someone to get married with, because you cannot sustain in this next stage just being a model-driven company.
So the top ones now you think are ChatGPT and Perplexity?
I think it's ChatGPT and Perplexity, and everyone else is almost playing a commoditized sort of game. When you look at Gemini in terms of Google, that's the one where like they're going to significantly build that up. And I think Gemini ultimately is going to turn into that number 3 and eventually number 2. And that's why when it comes to Apple, when they bet on it, they'll bet on Google for Gemini in terms of that AI piece. But that's why Google needs Apple, because you need the biggest install base in the world in terms of that. But
so that relationship you think will just deepen?
But they couldn't do it with DOJ, because when DOJ was there, that's why it's like, okay, stay up. They couldn't even testify.
Just for our viewers, so the Department of Justice sued Google. Yeah. Google pays Apple $20 billion a year to its default. And what you're saying is while the case was going on, that relationship had to be kind of a little bit arm's lengthy.
Arm's length.
And now that it was interesting, I read part of the judge's opinion. It was pretty clear that if we were talking a year and a half ago and you're reading what the judge was saying, and you owned Google, you're pulling your hair out, because this guy's coming down hard. He's going to make them sell Chrome. He's going to make them do this. He's going to put them in handcuffs. Yep. And then basically while he's writing his decision, the world changed. And he says, okay, I really can't do anything here.
AI
changed the game.
Saved Google
right.
from getting broken up.
Right.
That's the crazy, like when you actually start to put it together, that's essentially what's happening.
While he's writing his opinion.
Right. And that's why it came down to like DOJ had a very good case. Like as
without question.
So and the amount of effort spent on that case is unbelievable. But it came down to AI. It changed the whole game for them.
Right.
But it also just speaks to now. It's like you cannot wait. Like, because a lot of times, like from an investor perspective, like CapEx is not sustainable. 350 billion big tech CapEx this year. That the expectations are that was going to be 280.
Right.
It's 350. Next year it's going to moderate. Then the bubble is going to burst.
I was actually coming to this. So let's talk about that. So you can search engine anything these days in a much more sophisticated way. So you take the top guys, you add up all the CapEx, it's like $300 to $350 billion. But by the way, one thing I say about what's happening right now is, I said this on my weekly wrap a few weeks ago. It was the week when NVIDIA reported.
Yeah.
I said, forget about like what NVIDIA does, forget about the chips. Just look at the numbers for 1 second and tell yourself this. This is a $4 trillion market cap company. It's the biggest market cap company on planet Earth, and it just grew revenue 55% year over year. This is not a $1 billion market cap company that grew revenue 55%. This is the biggest company in the world. Think about what would have to happen for that to happen. And that tells you everything.
And think about what Oracle just did.
Right, and what Oracle just did.
Oracle's numbers. When you combine,
your mouth must have just like, what?
Look, it was like, and even though like Oracle is like one of our top 5 names, the level of that beat was jaw dropping. And then I'd also say it was the same thing.
By the way, they actually didn't. When I first saw the numbers, I thought to myself, typical Oracle, screw up once every like 3 to 4 quarters. And then after you read the first line, it was like, oh my God.
But then it was a similar thing with Microsoft on their quarter and Meta in their quarter. See, that's why my whole point is I'm not saying you're not going to go. So just going back to the whole bubble. Look, as someone that covered tech stocks in the late 90s, so I saw, like I lived it, like covering tech through the bubble, burst, and everyone's like, can it happen again? Is this a .com? The difference then versus now is like, and again, people will show like a Cisco chart in 99 to an NVIDIA chart today. If you go back late 90s, like the business models were flawed. They were basically VC run. They were upside down business models.
What do you mean they were upside business models?
Upside down. They were losing money.
Right.
These guys, it was all VC funded.
It was a deck saying we're going to do this.
Exactly. Now, big tech spend $350 billion a year, and big tech has over $1 trillion in the balance sheet. So first, you're being supported by companies that have more cash in some countries. Two,
by the way, just say that again. Just because it's an important statement.
But it's an important statement because big tech, $350 billion a year that they're spending, and they have $1 trillion in the balance sheet when you combine the cash they have. So it speaks to my view, like you are being supported by
the biggest companies in the world.
By the biggest company, which essentially you could say are almost more important than even many countries relative to how much cash they have. And then you actually start to think about it and be like, okay, you only have 3% of the enterprises in the US that are actually going down the AI path today because it's so early. Europe, 0. Asia, non-China, 0. Middle East, just starting with the build out in Saudi and UAE. The point is, like, it just shows where we are in the cycle. And then just to compare with the bubble, the use cases are real. I mean, in terms of like what you see across on the enterprise, healthcare, insurance, for pharmaceutical. The technology speaks to like when Jensen, the godfather of AI, came out with this chip, combined with the software and the hyperscalers, you've essentially built a machine that's just going to continue to amplify. And now it's coming to consumers because guess what? Autonomous, I think 20% of vehicles over the next 5-7 years, not going to have a driver.
Where to come to that?
Robotics,
yeah.
I think one of every 10 to 15 households is going to have a robot, but not a traditional robot, a humanoid robot that actually is essentially, very similar to, what I'd say is almost like a human brain.
Mm. You mentioned something I just wanted to press, like Europe is nowhere. Like when you go over there and talk to people, like why is Europe nowhere?
And it's a huge frustration because like I speak at a lot of these events there, and like every startups, they're leaving in droves.
They're leaving Europe to come to the United States.
Either U.S., Asia, Middle East.
And why are they leaving?
Because of the privacy issues, you can't essentially do anything there. If you actually have a startup, you got to write like an 800-page document to actually get approved from some municipality, which gets approved by government. The problem is that when the privacy and the scared level of AI in Europe, you're going to have small African countries that you've never heard of ahead of Europe. Because that's the scary thing that's happening there. And that's why, like, from an innovation perspective, the world's going ahead. Just like Middle East, think about it. Look what's happened in Saudi, UAE, across the board. And Europe is basically being like, okay, we're focused on the VCR. I think the way they're going, you can maybe have some Blockbuster videos stores that might start to be built in Europe. I mean, I know there's only one in Alaska.
I understand what you're saying. What do you mean Blockbuster video stores?
They're going back to the 1990s.
Europe is.
Yeah. Europe is like a Back to the Future moment.
That's how overregulated they are.
It's the regulation, the red tape, worry about privacy. That's why if you're a startup, you're leaving. That's why you see, investors right now, what European tech stock, where are things being listed? London Stock Exchange? There's companies that literally could hit a 3-wood to the London Stock Exchange. They're where they list at New York Stock Exchange or NASDAQ. So the problem is it's just the reality of what's happening in this world.
Let's switch gears and we'll let's talk about Tesla and Waymo. So I had Itai Michaeli on my show, and he's bullish on Tesla.
Yeah.
But as I listened to him, he basically said that Waymo has a much more belts and suspenders autonomous driving with the sensors and everything. And so Waymo can start to be in big cities. But that Tesla has chosen a route of just cameras, and that he doesn't think that they, at least at this point, have the ability to do autonomous driving in big cities. And so I didn't ask him on the show, but when I thought about it, I thought that's kind of like a real weakness, because the money is going to be in big cities. So let's talk about Tesla to begin with. I find it amazing that peak earnings of Tesla were 2022, and where the earnings are going to be this year is like 60% lower than they were in 2022. It's a testimony to the belief in Elon Musk that the stock is actually flat over that period, but certainly doesn't look great. Give us your thoughts on Tesla. Where are they in autonomous driving? What has to happen to this company to make it better? They're losing market share to China. Let's talk Tesla for a while.
Yeah, and look, and I think for us, most people know us for Apple in the early days and really Tesla in the early, right? In terms of identifying that, because it's my belief that Tesla is the most, along with NVIDIA, disruptive technology company in the world, in the future. Because look, the reality is when you look at the future for them is about autonomous and robotics. So when it comes to losing share, deliveries, numbers coming down, and it's a huge frustration of the bears, right? In terms of Tesla, is that the whole future for Tesla, the whole growth, it's all about physical AI, autonomous and Optimus, on the robotic side. When it comes to autonomous, see, my view is way more $230,000 cars. They're essentially in 5 cities in the United States.
That's how much the cars cost, because of the incredible technology that they have all over the car.
Yeah. So
how much does that car cost?
$200,000 to $230,000.
Wow.
So now look, will that come down over time? Yeah, they're not scaling. No, I'm saying the reality. Waymos are cool. It's cool to tell your friend, dude, I was in Scottsdale, I was in a Waymo. That's great. Take a Facebook picture. But the reality is who's going to own autonomous? It's going to be Tesla's world, everyone else paying rent. Relative to the scale, producing these cars at $30,000, they're going to have millions of autonomous vehicles.
But how do they get over the fact that that doesn't seem nearly as good?
Or they don't use LiDAR?
I mean, it's cheaper, but it's cheaper for a reason.
But I believe Tesla, it's a whole different data model, because you have 10 million Teslas out there. Their model is non-LiDAR, so it's camera-driven.
Right.
As someone like myself, I spent a lot of time in Austin, in the robo-taxis, and obviously that's going to continue to get deployed around the United States. I believe they're going to be able to do it non-LiDAR. And I was I believe they're going to be doing.
And how do you do it non-LiDAR?
Camera set. If you look at how Tesla's done it, look, go back years ago. They're you can't build an EV like that. You can't actually build, a car that's actually going to. You can't build a supercharger network. Musk and Tesla, their whole existence has always been you can't. That can't. Same thing, because I believe it's going to be a data-centric model, the way that they ultimately build this out.
What do you mean a data-centric model?
Because it's all based on the AI from the data, from the technology that's been built into the algorithm. It's not just camera technology. It's the...
So you think it's camera plus AI software.
It's from AI software, and that's why ultimately what's going to happen is they're going to actually own a big piece of XAI, which I think will happen in November.
What's XAI?
XAI is Musk's AI technology company. Okay. So I just view the future that Tesla is going to continue to innovate more and more in autonomous. The interventions, which basically is a fancy term for saying a human has to get involved in terms of, getting on the wheel or taking control, are going to, I think, get to the point that you're going to have more and more regulatory approval for what I view as true level 4 and, ultimately no wheel, essentially, technology.
Level 4 means no driver.
No driver.
Right.
So, look, is that coming today? No. Is it coming tomorrow? But I believe in the next few years, that is within reach.
Well, so what has to happen in terms of technology for Tesla to get to that point? Because until then, this is not going to be rolled out all over the place.
You need to have, in terms of full self-driving,
Yes.
You have to get to a point that the technology is so good that it hits a regulatory threshold. That then from a federal perspective and ultimately the state, they say,
that's good.
That's good.
How far away do you think we are from that?
I believe we're 2 years away.
2 years away.
I think we're 2 years away from starting to get some sort of federal approval on what I view as true FSD for Tesla. Now,
full self-driving.
Full self-driving. Now, like, look, the scale obviously has to get there. Okay. You got to get robo-taxis to ultimately 35, 40 cities around the United States. You know, that's something that's going to need to happen. Waymo, look, because it's our view, like we're much more neutral. We were bullish on Uber. We're much more neutral and negative on Uber because it's my view over the years that Tesla will ultimately dominate that opportunity. The economics on ride sharing are going to come down significantly. That's going to be major pricing pressure for Uber, Lyft. Because the way it's ultimately going to work is if I have an Uber and I live in New Jersey and I'm here right now in New York City, when I put my Uber into the network, my Uber right now, my Tesla could be driving around New Jersey, picking people up, making money. Because 94% of the time you don't use your car. And then I make sure it's back in my driveway by 6 p.m., it's made $500 driving people around.
So people have a little side business.
Of course, it's no different. Like
that's what you think is what
it's
Tesla's
like me and you
do.
buying a medallion.
So is that an Uber business or is that a Tesla business?
That's a Tesla business.
That's a Tesla business.
So that's why. And look, that'd be like me and you buying a medallion for a taxi service. And
right.
So it's the same concept. And that's where like my view is termed like physical AI. And that's when you look at everything Jensen talks about, physical AI. Autonomous.
What is physical
AI? Physical AI means physical devices, physical
that
action machine that use AI. That's robotics, humanoids.
I understand.
Autonomous.
So if we're 2 years away, let's say you're right. Let's say 2 years from now, it's clear that Tesla
level 4
is level 4. In our world, 2 years is freaking eternity. So what happens to Tesla between now and forget about robo-taxi.
Sure.
Let's talk about the fundamentals now. What happens to Tesla over the next couple of years? Because the tax credits are going away to buy EVs. Are the earnings going to go down another 50%?
I don't think they're going down another. I mean, I think you have some stabilization from margins. Some of the demand destruction started to stabilize, in Europe. You have new models that come out, I think, probably over the next year. But the reality is, like, look, it's the most if I've covered 100 public companies, like the most emotional bull-bear debate out there will always be Tesla. The bears would be like, oh my God, they missed earnings again, 20%. The bulls would be like, robo-taxis are now in 15 cities.
But by the way, having run hedge funds, I have to say, if I was an analyst and I had pitched Tesla as a short, okay, and I had said to my boss, I am super confident that the earnings are going straight down, and that 4 years from now, the earnings per share will be 60% lower than it was in 2022. Let's short the stock, and it all happened exactly as I said, and the stock is flat. I'm going insane.
Well, that's why I could tell you, like, as someone that lives in like the institutional world, but also on the retail world in terms of private client, speaks so much to retail, Wedbush and others. I think this market, what's been so frustrating for many is like from the Palantirs to the NVIDIAs to the Teslas to many other names, where a lot of times investors have been, if they've done their work on the negative side, they've actually been right in terms of sometimes their thesis, in terms of numbers. But what they've missed is
what's coming.
And I think that it's been you've obviously lived it, for decades. I think that's been the most difficult thing for stock picking. If you're very valuation centric, it's been a very, very brutal years for many of those investors. If you can't,
let's talk about Palantir for a second. Talk to me like I'm a moron. What does Palantir do?
Look, and Palantir, and I'd say if I think about like in my history, like Tesla being like the most controversial, Palantir being like number 2.
Okay.
Like I'm saying one, like, because like we're bullish on it like 10, $12. It is the most institutionally hated. We're getting
Palantir.
we're getting emails left and right, be like, this isn't about. I can't believe you. I mean, like the craziest type emails ever
From
and
institutional clients.
Institutional, like
saying,
left, right.
But like, how could you recommend this
like
stock?
This guy should be like fired, that he's bullish on it. Ives like has no idea about this. But my whole view on Palantir was a very simple one. It was like, okay, Karp is a Musk on the enterprise. In other words, like Alex Karp is a genius that understands data and he understands where the world's heading. Mm-hmm. When what he did in government, because
what does this company do?
Palantir's work with every 3-letter agency in the U.S.
Yes.
Any Western government, from there, Europe, Israel. So basically, like, if you think about any sort of like MI6 type of movie, the software behind that in one stage or another has been Palantir, government.
So explain to me what that software does.
And they basically are able to take mounds of data and analyze it in a way that the scale and the speed is unmatched. Now that's data.
So have they ever given like a specific use case of what that meant?
Now they can't talk about some of the stuff on the
defense side.
Defense side. But from an enterprise side, think about it like, they're able to go to an insurance company, go through their data, and in the course of 3 days being like, okay, what you're charging customers is off by 20%. Your actuary rates are off by, 20, 30%. You should actually be focused on this demographic and these people based on your data. And the marketing department is like, how do you
know that?
Know that based on the data.
Okay. So they can mine your data much better than you can mine your own data.
They can mine their data in a way that basically no other company in the world can mine data.
Now, who have you heard that from?
Probably over 100 CIOs.
You call a guy up. He runs a company. Tell me the conversation.
But just to be clear, the whole reason we were bullish on Palantir is that we would go to these like we'd go to these like customer events. Mm-hmm. Okay, these like stocks like 12, 15 bucks. And basically, it was clear to me where, okay, government is where that was their base foundation, just like Oracle, right?
Right.
But where they're going on the commercial side, oh my God, because now they're taking that technology, and it was called AIP from an AI perspective, and as they're building that out in the enterprise, that is going to be the magical solution in terms of AI. And we would talk to customers left and right, be like, we've been trying to do this for 2 years. We've had every consulting firm in. We paid $5 million.
Trying to do this.
And here's what's crazy. Palantir doesn't have direct salespeople.
Really?
So
it's all word of mouth.
It's all word of mouth, and it all basically it's basically companies that go to boot camps that they run or come to them. So once I started to realize what they were doing with companies, I realized like, look, they can miss a quarter. It could take time for this thing to work, but in my mind, this is...
Is there anybody else out there that's close to them? No one.
Like, no one's even...
In the universe.
In the universe. Now, there's companies like MongoDB, Snowflake, from a software perspective, Oracle, they partner with Palantir. Microsoft, they were going up against Palantir, partner. There's like a lot of companies, like they go up and finally they're like...
They're too good.
They're too good. Now... Then it goes back to like valuation, so expensive. Look, my view on Palantir is basically like they are the future. So when I think about the trillions of dollars that's going to be spent, I view Palantir as like they are going to be, and they're a household. I believe they're $1 trillion market cap because it's my view the commercial business.
What's the market cap now?
I mean, 300 billion or something.
Okay, so you think this could be still a huge stock?
And even though somebody like, how do you justify it's 80 times earning, it's 80 times revenues? Is there? My view, like everyone knows this, for like the last 25 years, whatever. Like I've never been a valuation sensitive tech analyst, because my view is like I look out 3-5 years, if I believe and I do all my work, and look, over 3 million air miles later, the point is like traveling the world, like that's the other thing, like there's many, they're the smartest guy in the world wearing the Peter Millar on Metro North, and they go to San Francisco twice a year. So the point is like for me that travels like Asia 4 times a year, all around the world, I feel like a huge advantage for me is like been seeing it, boots on the ground. So that has actually been a huge way, is that a lot of the bears, when they're in hibernation mode, they can't see AI in their spreadsheets.
Let's talk to a small company that you're recommending, Oklo.
Yep.
Explain to people what Oklo does. It sounds too good to be true.
But it's an Altman name.
Okay,
Yep.
just tell us. It's a nuclear reactor company. Like, what does this company do?
First, so just take a step back, and like we have our Ives AI 30, which are the 30
right,
names.
It's one of these names.
But Oklo's 0 revenues today. You're like, oh, is this a bubble? How could you justify? Because it's my view that there's more data centers under construction today than active data centers.
So say that one more time.
So there's more data centers
being constructed than actually exist.
Now,
how many data centers actually exist today?
And it depends on how you define data centers. But basically, like in terms like core ones today, like the data center build out today, I mean, we believe you're eventually gonna have like tens, hundreds of thousands of data centers as you're gonna have mini data centers as it all gets built out around the world. But to me, nuclear,
so the constraint is, as we all know, is energy.
You need 6 to 8 times. You need 6 to 8 times more energy than you have today to fuel these data centers. It's not going to be the grid. You'll have obviously changes, utilities. The magic bullet. It's going to be nuclear, and it's like nuclear to me is going to be the huge piece here. And when you look at Oklo from a nuclear technology perspective, and obviously they've really been anointed by the U.S. government, and
so they build small nuclear reactors, and I was reading that they are able to reuse used nuclear material.
Yeah, and that's a very significant piece of what they do.
Yes, because this way you don't have to bury the stuff.
Exactly. So to me, they are like the number one nuclear energy play when you think about.
Now, where are they in terms of approval? Have you? This is an old joke about I had my criminal law professor was Alan Dershowitz, and they once asked him a question. They said, "Do you believe in plea bargaining?" And he says, "Do I believe in it? I've actually seen it done." It's a funny line.
No, sure.
And so, have you seen these reactors, and do they work?
No, so I've seen them. I've talked to regulators in D.C. and around the country. The point is like they are on the cusp of the build-outs of their data. Like when you think about the build-outs of the nuclear reactors, because remember, this is all coming, right?
Right.
I believe like in the next 3-5 years, like they're gonna basically be like ubiquitous in terms of their build-out across the U.S.
Basically, what you're saying, you think this product is potentially so great that tremendous number of data centers right next to the data center is going to be this little nuclear reactor powering the data center. That's basically your case.
That's our thesis,
right?
Like how I think it's going to play out.
So what is sort of the next data point that you want to see?
It's going to be the build out.
Because obviously it hasn't happened yet.
Yeah, sure. Like if you look like last week, there was like an approval they got. It's trying to find the little incrementals where it's like, okay, this thing's happen. Like, is a timeline getting accelerated? Because guess what? U.S. government, they want to accelerate this.
Because
they know that the biggest constraint.
Who, by the way, from which parts of the U.S. government does this thing need to be approved by?
There's energy. I mean, there's obviously a national security piece. I mean, there's a bunch of different components of it. But here's the problem. In China, you don't need the regulatory, you have one person that signs a deal, right, in Beijing. So the point is like U.S. knows that when Trump does these meetings with big tech CEOs, if you said what's the biggest constraint, it's power.
Right. let's talk a little bit about some of other stocks while I got you. You have a couple of China companies in your 30. You got Baba
and Baidu.
You got Baidu. Like, how do you know what's going on in China?
Sure.
You're one of us living here in the United States. You go to China, you tour around. What? See, I would be uncomfortable. Me personally, I would just be uncomfortable having anything in China in my portfolio because I just figure I could wake up tomorrow morning, the Chinese government does something. I don't know what the hell's going on.
If you're not part of the party, right? Like, so what? In terms of the Communist Party, look, first, I go to China, a few times a year. So the point is, we have a pretty good network that I think we built there. So my view is okay, there's a reason I don't have 10 Chinese companies in our 30 and we only have 2. Because it's
by the way, so you said Dan has a product, it's an ETF. Yep. It's the Dan 30.
The Ives ETF,
and Dan Ives 30, it's basically AI related.
Yep, exactly. And the second, third, fourth derivatives.
Right.
But see, Steve, to me, it's to the opposite, what you're saying is I feel like you have to have some exposure to the China tech market. Because when we think about the AI revolution, it's not just going to be all US centric. So to me, when I look at Baba and Baidu, those two specifically, they're the AI winners to me in China. Is there risk? Of course there's risk. But I believe they will be key to ultimately that build-out that we see in China. But there is risk, but also that's why we're in Asia. We'll be in Asia next month. That's why it's a huge piece. I think it's been a big differentiator for us, to be honest. I think it's very easy when you live in a more of a cocoon-like environment, you could get caught up in sentiment and stuff like that. But then all of a sudden, when you're in China, when you're in Taiwan, when you're in Vietnam, when you see it, a lot of times, that's probably been some of our biggest aha moments. There have been times there were times in 22, 23, I'd be traveling and stocks are selling off. So picture I'll be sitting there in Taiwan, everyone's dude, things are selling off. This is a bubble. Yet I'm going around to the different fabs being oh my God, demand's 15 to 1.
Right.
So that's where it's
let's talk about MongoDB for a second.
Yeah,
what does MongoDB do and why do you like it?
Because think about Palantir, MongoDB is right here. I mean, they are basically a data-centric model but
not as good as Palantir.
Not as good as Palantir, but here's the difference. They're a consumption model. So what that essentially means is the more you ingest, the more that they make. Mongo's issue has been they've been waiting. So when you think about the AI build, it's chips, hyperscalers. So think about it. It's if there's a Eisman Ives, it's building it out. The use cases, the consumption happens later because you have to build it. Mongo's been waiting. If you look at Mongo's actually, the stock was underperforming a lot. Now, as everything's been built out, this last quarter, bam, Snowflake, bam. Because now
people need the data
mining.
They
need the data mining.
I see.
So that's why
they can't all use Palantir.
You can't all use Palantir. And then when you look at it, that's why our whole view is of the second, third, fourth derivative. You have to view this as okay, it's you have to almost follow the kind of breadcrumbs. And you can't just stop here. You got to be okay, then who gets it here? GE Vernova is a name that we're bullish on.
Me too. No, I've owned it for a while.
But Nemesis is another that we're bullish on. So it's trying to figure out the breadcrumbs.
So let's talk about breadcrumbs. The one stock that I was the most surprised about that's in your 30 is Spotify. Why? I use Spotify, but what's that got to do with the whole AI story?
Because to me, it's really around the AI piece in terms of how Apple's in there. Apple's not, because in my view, how they're ultimately going to monetize AI from a consumer perspective. They're going to be a use case when it comes to AI, Spotify. I think because I think AI is going to be used in terms of preferences, in terms of buying habits, in terms of data that will ultimately use from an advertising perspective. So I view it very similar as how AI, Amazon's going to be using AI in a lot of similar capacities. It's a view of where AI is going, not where it is today.
Right.
But that's also on the consumer perspective. It's like you can look at Meta, but then like look at like where Apple, look at how, like Alibaba would be a good example in terms of how that's going to be mined.
Dan, that was great.
No,
thank you.
It is a great conversation, and thanks just for having me. I'm a huge
really
fan.
Appreciate your time.
I'm a huge fan of you. I'm just great to be here.
Thank you. This podcast is for informational purposes only and does not constitute investment advice. The host and guests may hold positions in stocks discussed. Opinions expressed are their own and not recommendations. Please do your own due diligence and consult a licensed financial advisor before making any investment decisions.